It's Wednesday, and we're seeing the major U.S. stock averages trend lower. This does come on the heels of Tuesday's sell-off. So joining me to weigh in on the action is Jonathan Corpina of Meridian Equity Partners. John, great to have you here today.
Good afternoon.
Well, first and foremost, Globalvoices sold off following yesterday's sell-off here in the U.S. But given that there are concerns about the repealing of Obamacare, and we'll get more on that Thursday, in terms of the fundamentals, what are you paying attention to?
Unfortunately, right now, I think Washington is really dictating our market and dictating which way the tape is moving. Clearly, the headlines that have come out of Washington have been pretty significant, and I think investors are feeling a little apprehensive as to whether President Trump is going to be able to enact some of the policies that he was discussing during the election campaign. So, at this point, right now, the major headlines of healthcare and infrastructure, defense. Security, national security, those ideas have been put on hold somewhat as investors don't feel fully confident that things might progress in the manner in which they were originally expecting. So we are seeing this pullback in the market ever so slightly. We've had a very significant run up in the market, and it's healthy for our market to take steps up and down. And what's also interesting is that this is the first kind of big negative headline that we've seen in a while that has really stopped or slowed down this market. So it's going to be interesting to see how the market kind of absorbs all this information over the next few sessions.
Well, Jonathan, now that you've covered the fundamentals, I do want to ask you about the technicals. Now, depending on who you ask, some people may say we have entered bear market territory or we're about to. So in terms of indicators and levels, what are you watching?
So clearly on the upside, we got close to that 2,400 number there for a little while. So that is a little bit on the higher end of an indication there. And I think at this point here, we need to see the market kind of maintain some short bands and some tight bands. I think 23, 26 on the bottom, on the low end, could be an area where we might be able to see this market bounce a little bit. But it's going to take a little time for us to really see how the market absorbs all this information.
And last but not least, before we wrap it up, I do want to ask you about oil futures very quickly. We got the EIA as well as API inventory figures, and we did see bigger than expected inventories in crude. But there are some rumors that OPEC could extend its output cuts. Where do you see oil going?
Right, it all comes back down to supply and demand. As we were trading above $50, I think investors were a little bit uncomfortable with that at the point, meaning that we've seen a lot of volatility in oil, and if it was going to continue to the upside, I think investors would have had to pull out of the equity markets because of that. I think investors feel comfortable in this $40 to $50 range. We really have to see what some of the Middle Eastern countries are going to do, Saudi Arabia, what their supply and their production numbers are going to be, because clearly that has an overall effect on oil, and that does translate to the U.S. equity markets.
Well, at least we seem to have a resistance level in terms of oil, and we're only halfway through the week, so we'll see how the equity markets fare. Thank you so much for joining me today.
Thank you. Have a great day.